Hello,
Hey Angela, how are you today?
I'm good. How are you?
Good, thank you. Doing okay. Doing all right. Thanks
Oh,
for coming on early. I'm glad it worked out for both of us.
yeah, it's okay. I just
Good.
have a dog and have to take her out
That's all right. No
around
worries.
7 o'clock.
Okay, no, it's all good. I got a dog too and two kids. So,
Oh, really? So
yeah.
big family
Yes, yes, it gets busy.
sometimes.
Awesome. Awesome. All right, so let's begin. Do you have any trades you've taken recently? Do you have screenshots of them with the
Yes,
entries and
I
exits?
do. I have.
Okay. So you can go ahead and press the green button to share your screen and then
Let's.
put your trades up on the screen and we can have a look at them.
But they're not. I didn't trade in the last month almost. Let me
No problem.
see.
Whatever.
The just I have just to find them. Okay. So let me share the screen. Just a minute. Here. And I can show you what I have been doing. Just to come on the screen. Okay. So here I'm playing a breakout, which is
Sorry,
actually
I just
that's not.
I just see your folder. I don't see that you've opened up a
Oh,
chart.
really?
Yeah.
Ah, let me see. Okay. Do you see the charts now?
Yep, that's it. Good.
Yes. So here I am supposed to trade this level, but it was in pre-market, and I just entered here and exited at break even. And then I tried second time and had a loss. If you, I'm not sure. Do you see?
Yeah, these are shorts, right? Or no, wait. The
No,
first,
it's a long.
okay, first one's a long, you got a partial, and
This is
then
a long. Yes,
gotcha.
I was supposed to enter here at that level, but it
Mm,
was pre-market, so I don't do it. And
gotcha.
enter at the break of the yesterday high. So this pink line is yesterday high. The blue is pre-market high, and this is previous day close.
Okay, I see it. Okay, great.
So this is not a breakout. That's my
Okay.
ways. I'm just trying. I don't have rules for that, by the
Oh,
way.
all right.
This is trying to
Yeah, trying to figure it out. Yeah.
find how to play this.
Okay.
But it's not good because it's extended. So
All right.
here is meta. If you see, it's
I
the
still
same.
see the I still see the apple.
Because I'm changing, they're in different. Let again.
What you had is when you share the screen, make sure you click on share the screen, not the
Yes.
link.
But what is this now? Let me do something because. So I open a couple of. So this is matter,
Mhm.
and it's the same because here on daily broke this. this high here, and then there is a hammer. So I'm anticipating a move up, and what I did here, just to see on a 1 minute up, if I, yeah, so this is, so I enter, exit at break even, and then enter again.
Mhm.
This is what I did here.
Okay, so you're looking for the breakout of that blue line there, huh?
Yes. So, yeah, because yesterday was a hammer, and yes, and here it's like a small range. There is no much price action at pre-market, but still a small range. Yes, and
Mhm.
I'm playing this. Let's see the next. So it's a game matter.
Okay.
Um, what I did here. So I enter here
Mhm.
because of 5 minutes. So it's holding the. This is the pre-market low. So
Yeah.
it's holding the pre-market low, and so that's a pullback on 15 minutes. And yes, and so I'm playing up, but I don't know where to partial. I just partial, and
Mhm.
so this is in general
No problem. No problem. I understand. It's all right.
uh,
Cool.
again matter. So I will find one stock which I believe that it will break, and here is the same. There is a resistance here. The stock at pre-market is above resistance. And I'm expecting that here it's pulls back, and it's going up. But I don't know what I did here. I didn't trade that. I don't see my entry here. I can send you the because I have others as well in which
That's all right. We've already seen 3 or 4 here, and
I yes, I can send you because I have also some reversals and I have losing trades as well.
Mhm. No problem. You know, the key thing that I've already seen is that you're doing these breakout attempts, but you
Yes.
don't have a very specific rule book in place, and you can tell already. Okay,
No,
so
I don't have rules. It's kind of a feeling, and I use some rules around breakouts, but it's not exactly that.
okay, I'll share my screen now, and I'll show you something, and let's see if this makes any sense for you. It should. It hopefully will. I'm sure you've seen this before, but we got to make it clear. Just a moment. Okay, there we go. Let me know when you're able to see my screen and this diagram.
Yes.
Okay, have you seen this diagram before?
Not exactly that one, but yes.
Okay, well, this one is actually very complicated. Only about 10% of this is useful. Most of it is
Mm-hmm.
needed. So let's make it really understand what is a breakout and why it's useful. So we'll zoom in right over here in this area. Very simply, stock gets into a range. You can tell where the top and the bottom is. It's nice and clear because it's just in there. And a breakout is when it breaks out of that range. That's it.
Mm-hmm.
Now, breakouts, they happen every day on a lot of stocks, and they happen on all time frames. If you're seeing a range on a 5 minute or you're seeing a range on a 30 minute, whatever, you'll find that there's a level, and that's a potential breakout level. So one of the key things about breakouts, what makes a breakout more high probability is when you identify a level that it could not break out from before. So every time it came here, there were always sellers to push it back down. Always. When the time comes that the seller moves out of the way, the breakout will happen, and it's an explosive trade. It goes fast. It just rips. That happens when the sellers are exhausted. Over here they were strong, here they were strong, here they were strong, and then that's it. They're out of the picture now. There's no more sellers. And that's why the breakout happens. And that's why the breakout that happens also from a level that was previous very good resistance, those are the best breakouts.
Yes.
So probability breakout. And after the breakout happens, very typically it goes for a distance and then it pulls back. The pullback is basically a retest of the breakout level. It comes into the area, not exact, maybe sometimes a little lower, sometimes a little above, sometimes precise. But it comes into the area, it retests, and once it starts going up again, there's another opportunity to enter, the retest of the breakout. So it's just like a follow-up of the genuine breakout, and it confirms the breakout. So when you get an entry here, this is actually a really good entry, of the highest probability entry, because by the time it's here, it's already done all of this. It's done the range, it's done the breakout, now it's retesting the breakout. This is when you have the highest probability trade, the retest of the breakout. Like you were saying earlier, you would like the high probability trades where you have a good success rate, like 60-70% success. That's this right here, right? So if you're going to trade a breakout, what's really important to understand is you want to be able to identify where is the resistance. That's right here. Ideally, it's in a range, and there's a resistance at the top of the range. Once you know that, then you know you're going to play breakout only from there. You don't want to play something here and think this is a breakout. This is not. This is the breakout. And when it's really good, you'll get a retest also. And that's when it'll go, and it'll go into the next range and it'll do something else. It's another game. So that's the configuration or the structure of the price action and breakouts. And what I want to do now is I want to show you a live example in the market to make it really real. I could show you many diagrams, but you should see it real. So then you can use it. And I'll give you the example of time frames and why it can be really actually quite funny with time frames. Just a moment, I will pull up my live trading. There it is. All right. It's loading up. All right. Do you see the charts and everything all pulled up here? Live chart? Okay.
Yes.
Okay, I'm going to blow up this one, NVIDIA on a 30-minute chart. All right. I'm going to zoom out also. Nice and easy. Now, simple. Look at this orange line here. Resistance, resistance, resistance. By the time it hit this resistance, I'm able to draw this line. 3 times it hit this level. It's not able to go. It's about 742 or something right there. And then again here, and it kept going. And then in the pre-market today, in the post-market yesterday, it hit up resistance again. This happened overnight. And then the pre-market today, look what happened before the market opened. Pre-market breakout. It just went straight up from the level. So now it's broken out. The market's going to open here, but you're looking at the pre-market and you're thinking, wow, the breakout already happened. So is there going to be a retest? Maybe there will. Look, in the pre-market, it's coming down. There's a possible chance for a retest. And sure enough, today, it did a very precise retest. And you can take that going long. This is a 30-minute picture. So, and let me show you that on a 1 minute today. So let's say the plan today is that's your orange line. You want to take the long. It looked open, came down, and goes right up. And if you can take that entry, that's the retest entry right in this area. Stop loss right down there, you're in the trade. This is the best, highest probability trade because it's already done the breakout. You're firm with the level. You saw the level was resistance for a long time. You saw the firm breakout, and here's the firm, precise retest. You just have to wait like 2 minutes in the open. There's your entry. This looks like a reversal entry and all that. It's not. It's actually just a retest because we're using a bigger time frame. We use the 30-minute, planned it. And this is actually the trade I took today. It's actually a simple one because it's really based on the structure right here. See that? That was the level we saw, the breakout, the retest. That's the trade today on NVIDIA. Simple.
To draw the line, like the resistance or support, how many touches?
That's a good question. Yeah. So It's a very good question. It's not necessarily so many touches, but how
Yes.
does it behave? And what's important is, try and think of it this way. Instead of touches, think of sellers. If you're looking at resistance, okay, think of selling. So the first time you found it went, and as soon as it went up a little bit, the sellers were strong. Oops, I moved it. The sellers were strong, okay, and pushed it right down. This time the sellers were even stronger. They didn't even let it go a little bit up. Here in the pre-market, post-market, the sellers were there again. As soon as it went up, it pushed down. Again, it pushed up a little bit, straight down. The sellers are so strong here that the moment it goes even a little bit up, they're pushing it down. You know, so, and it's quite precise. It's not like it came up over here, it was close, and then it went down, or it went way up, and then the sellers came. You can't trust. You can trust these precise touches. And these touches are, you can think of buyers and sellers. That's why you can think of sellers here. And on the other side, look, buyers here. There's one touch here, right?
Yes.
One time you saw buyers come in, but I'll zoom out more. Look over here, buyers, buyers. These buyers didn't even let it drop. And previously, before these buyers were there, it was a seller.
Yes.
That's when it's the most powerful line. When one line was support and then it became resistance. That would be this one here. On my chart, on this chart right here, this is very powerful. Because look, this was resistance. Then it did a breakout, right? And then it did a bounce approximately, but you can't really trust it at this point because it was just resistance and it broke out. Then it came right back in and it's going all the way. Then it came right back. When it came back, look, it was a small resistance, then a breakout. After this, look at that. Now bounce, bounce. What's most interesting is it was resistance, now it's support. And look, now again, it's support. On this day, I would have waited for it to come here and I would have taken a long from here. Because by the time it came, it was already support. Buyers were here. Where it was previously sellers, now it's buyers. Think of market psychology, which is just like in any market. You go to the market, you're negotiating for goods, you know, and it's market psychology. Are the buyers stronger? Are the sellers stronger? Those are the guys who are going to win the negotiation. So in this case, this is precisely where the sellers were strong. And at the same price point, a little later in time, like 2 days, 3 days later, the buyers became strong. And here. And then next time it comes right to that point, as the most recent thing tells us that the buyers were strong. So if it comes, which on this date came close, there's a long opportunity there. You can plan this long from 4 or 5 days ago.
Yeah.
Just like this trade today, I planned it from like 5 weeks, 5 days ago. Today was the day it happened, but I knew one day this level is going to break, and the day it breaks, I'm going to wait for it and go long. This happened 2 hours ago.
You know how stupid I am? I never look at levels in this way, by the way, like sellers and like analyzing like that. I just look touches and whatever, but I will try to short every touch up and I will be losing, yes, because.
See, now that's the thing. That's a different game. If you're playing the short from like here or something like this, what you're playing is reversals. Okay. If you're playing the long from here, like today, you're playing the breakout.
Yes.
Okay, so you have to understand what is your plan. What do you want to play? Are you playing a breakout or are you playing reversals? Now, generally speaking, breakouts have a higher probability of success than reversals. Also, the reversals, but they have a higher, what do you call it, reward. And firstly, the reason why breakouts have higher probability than reversals is because look at this. Look at the wicks. In this wick, you could get stopped out 2 or 3 times trying to enter.
Yes.
Same thing here. Same thing. That's why it's hard to enter reversal. I hardly play reversals. Mostly I find my range and I play a breakout. Mostly. That's the trade book.
I think this is happening almost
Every
not
day.
every day, but you can
On
find breakouts even on a lower time frames.
You can, but you know what's important? You can get really mixed up if you're looking at too many time frames. What I like to do is I just look at one. I look at the 30. Now you can pick one you like, 5-minute, 30-minute, daily, whatever you like.
Okay.
And it should be bigger than the 1 minute. And minimum, I'd say, is the 5-minute one. That's the minimum. But really, you want to look at something that's, the bigger you look at it, the more powerful it is. Like this is a pretty big time frame. Look, I'm zoomed out all the way to the
Yes.
1st of February. Now, this is 20 days of action right here. And I'm planning the trade based on 20 days of action. Now, when this happens, this breakout, I'm so convinced I can go in heavy with conviction because I know it took 20 days to set up this trade today.
Mm-hmm.
You can see the setup. It took a while. Now, on a 5-minute chart, you can't see 20 days. And if you go on a daily chart and you put so many days, it's going to be too big and you will not get opportunities regularly
You
for day
won't see exactly this on daily. I mean, you have to look in the weeks, and it's a bit
It's difficult. And
more
there's gaps,
difficult.
and yeah, it's
Yes.
tricky. So the 30 I find is a good balance,
Mm-hmm.
to look at. And look at one more thing. There are no moving averages.
Perfect.
There's nothing here. There's only volume and candles and whatever horizontal lines that I draw.
Mm-hmm.
That's it. That's all there is. You're just trying to find key levels for a breakout. That's all you're trying to do. And that's again right back into this graphic. You just got the price, volume, and you're looking for the level of the breakout. And you
Yes.
can plan that. Look, like this one, it planned it 20 days. This was a 20-day consolidation. And then that's really cool. Now, I'm going to show you one more fun part where you can plan this breakout from 2 days before. Look at this. Here's the range. When it broke out on this side, it turns out it was a false breakout. False breakout because it came right back in. When you get a false breakout, it's very typical that you get a genuine breakout on the other side. It's like it's getting spring-loaded to bounce on the other side. And you can think of buyers and sellers. What happened here is this broke out. When it broke out here, what happened? It became cheaper. The price went down. It became cheaper. What happens when things happen, when things become cheaper? People want to buy it. It's cheaper. They can afford to buy it, so they buy it. So now you have a lot of buyers here. Now there's lots of buyers at a good price. They are happy to hold it. When you have buyers with diamond hands who want to hold it, ready to hold, they'll hold. And you're likely to get a genuine breakout. That's why, look at this, false breakout, genuine breakout today. This false breakout happened 2 days ago. This was Monday. Sorry, this was Tuesday. Wednesday it continued, and that's where the buyers came in with the earnings report and all that. It was cheap at about 650. And look at that. In the pre-market itself, it pushed 700 and opened like near 750. See how powerful these false breakouts are, which sets us up very nicely for today's price action, which is just bounce off the breakout. You can see how much confirmation you have for this trade today.
Yes.
So that's the structure you want. You want to have nice understanding of where your levels are, which you can see it clearly on a big time frame, like a 30. Ideally, you get a nice false breakout, and therefore, when the breakout happens, you can enter the breakout. If you missed it, like you missed it today because it happened in the pre-market, just wait for the retest. That's what happened today. Boom. And now look, it's just consolidating, which is this area right here. It's gone up, it's done the retest, it's consolidating, it's going to run. This thing will probably hit 790, maybe 800, but I think 780, 790 today. That's what's happening. And then it'll make another range approximately in the 800 area. And it'll consolidate again like this for 1 or 2 weeks. So that's market structure. Basically, you have range, false breakout, genuine breakout. And genuine breakout, retest. After the retest, consolidation, then it'll run to the target. Very simple market structure. Now, if you look at all the trading I do, that's all I do. It's just this. 30-minute chart, find my levels. Where is it? Is it in the range? Is it false breakout? Is it a breakout? Is it retest? Where is it in the range? Is it already broken out and doing a consolidation before running? Whatever it is. Identify where it is in the structure and then plan your trade. Nice and simple. And then you can really, really plan. Like you got the breakout level. If the price opened over here somewhere and it's looking strong to go up from your orange line, your level, then you can get a breakout entry, for example.
Can you repeat, because I had the camera there, I don't see it.
Sure, no problem. For example, today, if this was the post market and let's say the price was here in the pre-market in this area, And let's
Mm-hmm.
say it opened right here, then you can plan it could break out. If it breaks out, you have this level. This is the breakout level. If it's starting to look strong from there, that's an entry. And if you miss it, no problem, because it'll go, retest, and then continue.
Mm-hmm.
In this case, it did the breakout, you get the retest. In another case, maybe the breakout would have happened later. Maybe after the open, maybe it aligns with a 2-minute ORB or a 5-minute ORB or something.
Mm-hmm.
So the whole point is when you're trading breakouts, I think it's really important to identify levels on a bigger time frame. Like I like the 30-minute. You got to see what time frame are you comfortable with. Is it a 15-minute chart, 60-minute? You know, you got to
I think
figure that out.
I'm okay with every time frame. I mean, I I'm not sure. I didn't look much into 30, but it makes sense because if I enter on 1 minute, so 60 minutes is really very high time frame
Yeah,
for a 1 minute entry.
yeah,
So 30 is the nearest like a little
mhm.
bit longer term time frame because
It is.
15 is a
In
more
fact,
short term.
yes, I agree with you. This is the 60. Now it's a similar picture. You may be able to see the same levels. You may be able to see the same
Yes.
thing. But here's the funny part about the 60. It's telling me that this candle is pre-market,
Mm,
which is not. Half this candle is in the pre-market, half is 9:30.
so
That gets confusing.
you just guess because there is a big wick there, and
Yeah.
you are guessing that probably will go up.
Hmm.
That's the 60.
Yeah, and it's hard. That's why the 60 gets confusing because of the time. And here's
Mm.
another thing about the 60. Look at the day. 1, 2, 3, 4, 5, 6. So you have about 6 candles, maybe 6.5, which is really not enough candles to see a good pattern if you're looking at like an
Just a minute, just
yeah.
1 minute. Hello? Yes. Okay. Sorry? Uh, can I call you after like an hour? Okay, I'll call you. Thank you. Yeah, it's okay.
Yeah, yeah, sure.
Sorry,
So
that was work call.
no problem. So the thing about the 60 also is that there's just not enough candles in a day to find a good pattern.
Mm,
Sometimes you'll see a double bottom within a day. Within the day, and you'll see it on a 30, but the 60 just becomes long and you don't get enough opportunities as a day trader. It's really good for swing traders, people who buy and hold for 5 days, for 2 weeks, they hold the position.
mm,
We're talking about getting out within the day. The 60 makes that quite difficult, I find, because it's just too long
yeah,
to
you're right.
get setups. That's why the 30 is actually a good balance. Because also with the 30, it's a big time frame. The candles are decently big. And for day trading, that's plenty of action. You can get lots of dollars out of one 30-minute candle.
Mm,
So that's why this 30 is a good balance for day trading. You can plan your trades with significant levels and you can take advantage of them right at the open. You don't have to wait for 2 hours after the open and maybe there's a ABCD or something. It happens pretty
yes.
quick. I trade only the open and I do it this way. So that's the key point I wanted to share with you about breakouts. You don't just trade the breakout on a raw 1 minute time frame.
Mm,
It's really good to plan it. Really a good thing to plan it. And again, plan it is very simple. The procedure is use a 30-minute to plan your levels. Where do you see a false breakout? Now get ready for the breakout. And you're ready for it. Before the market opens, you're ready for it. If it breaks out, great. If you missed it, no problem. If it gives you a retest, take it. If it doesn't give you a retest, you can enter when it does an ABCD. You get one
mm,
leg and 2 legs. Don't take a third leg. 2 legs is plenty. Usually the first half an hour, 2 legs up, and then after that, you don't know if you're going to get a third leg. It's risky. So you can plan on 2. That's that ABCD pattern in between. And let's have a look and see what it really did today. So here's the retest. Okay, and from the retest, basically one leg was this, and you see this consolidation right here. From here to the second leg. After that, it's not gone anywhere. That's basically hit. That's the top. There was no third leg. There maybe will be, I think, but towards the end of the day at like 3 o'clock. One leg from basically the bounce of the level, and this was a consolidation ABCD, second leg. That's it. Nice and easy. This is supposed to be 742. Yeah, 742. That's that. So even though it looks like it's a reversal to go long from here, it's a breakout. It's actually a retest of a breakout. You know, and yeah, that's I traded that, and it well, today was about $2,000 on that. You know, but again, there was no stress on this trade.
Yes.
Because it was planned very easily here. It was just a matter of waiting for 2.5 minutes. It bounces here. Okay, then go. So as far as figuring out, is it going to be up? Is it going to go short? Is it consolidating? Is it bouncing? Nothing. It's just before the market open, I'm telling myself before the market opens, if it comes and bounces from here, I'm going long. So by the time it came down here and this wick was forming, it's on its way up. I'm taking an entry somewhere here. Stop loss. And then you're in the position. You can target the previous resistance, which is about 770. Look at that, 770. That's it right there. That's pretty much it. Didn't really go much more than that. We got from here up to 770. You get the majority of the move right there. If you execute it correctly, this is the trade. And that's it. After this, you don't need to do anything else. It takes about 15 minutes. And you're done with the day.
Yes.
So today was really like a picture perfect kind of setup. And honestly, I see this on most days.
Do you look in daily?
No.
Or you just look 30 minutes?
That's it, just this. Oh, where'd it go? 30 minutes. That's it.
Okay, so
nothing else.
I have some, like, I know that I don't understand structure, price structure, like the way you are explaining. And that's something which is missing from my knowledge.
Okay. So price structure. This is the price structure. All right. And let's get into a few more details, because once you understand this, then you'll understand where the price is in the structure. And then you can plan your trades, whether you like the reversal or you like the false breakout or the breakout or the retest or the ABCD momentum, whatever. All right. First step, identify a range. Okay. Second step, identify a false breakout. Now let's be clear about this false breakout. When it breaks out, it already gives you a clue that it's going to be a false breakout. The volume.
Okay.
When it breaks out and it does not have extra volume, it's just similar to the previous candles. There's nothing unusual about the volume. It's just all the same kind of like previous candles. It's telling you that this is going to be a false breakout. Because a real breakout needs real volume. Look at this, and look at this volume increase. Tremendous compared to the previous candles. See that? This volume is double of the previous few candles. It's a genuine breakout. So as it's happening, you can tell this is going to be a genuine breakout. As it's happening, you can look at this and tell it's going to be a false breakout. As it's happening. And sure enough, once it comes back in, it's a false breakout. And here's another fun little part. After the false breakout, it very typically tests the bottom again. So you can take an entry here.
Yes.
This is a very powerful entry too. And again, all of this is pretty low volume stuff. It's all happening down here at low volume. But what it's telling you is that false breakout, retest bottom, it's getting ready for a real breakout. So here's the fun part. When you're able to identify a false breakout, first thing is low volume. Next thing, it comes back in. Next thing, it comes and retests the bottom of your level. There's a long opportunity. Get in, stop loss right below the level. It goes to the top, and you're anticipating a real breakout. Maybe you can take some partials if you like, but be ready for the real breakout. And when it happens with real volume, increased volume, you can add over there and bring your stop loss up to about the middle of the range, right? And now you have a heavy position, and you go, and at the retest, if it gives you a retest, you can add even more. As it comes down and then it goes up, that's the place to add more. And now move your stop loss from the middle to just below the range. And look at now you've gotten here, you've gotten here, you've gotten here, and you're in a big position and it's going. This is a big day. This is a $10,000 trade right here. Just like this.
So structure, volume, and I never learn adding to the position.
Yeah.
That's never been, and I think that's something which is very important because
Yeah,
just holding some shares and
let me try and show you some things here.
never make enough, because if you're partial, then
So let's just analyze this one, okay? And this will be this is live today, AMD right now. What's going on? I'm gonna draw some lines, okay? So you can see the top of the range right about there, okay? And where is it? Sorry, what happened? Duplicate, and the bottom of the range is about there, okay? Approximately. This is the first few minutes. It just stayed in this range. This black line is the opening price. That's where it opened, okay? And it just chopped around the opening price, and look, false breakout.
Yes.
Retest of the bottom. Yeah, because it looked false breakout and it closed here. Then it came retest the bottom. Then breakout. Look at the breakout volume increased. You know it's a genuine breakout. They did a false breakout, it retested, and then it's doing a genuine breakout. And look, retest 2 times of your level. How perfect. Then it makes a move. Then an ABCD. And it runs to the target. 180, big number. Look at this perfect price action. This is structure right here. It happens on all time frames. So if you're just looking at the 1 minute, you can even do it like this. Now, Andrew does this. He just throws up the 1 minute chart and he's just watching this. This is the range, breakout with volume, retest, goes, ABCD pattern. You can add in more. And the second run. See, 1 leg, second leg, and that's it. After this, you don't know what it wants to do. It's just going to be a mess. And all of this takes what? 1 hour at the most? The whole thing? You trade 1 hour a day, you're good. Mostly you're done in 15, 30 minutes.
Yeah.
That's
but I
it.
never look at that way. I mean, it's easy in general. I did it in a very difficult way, to be honest.
No worries. It's really simple. Let's look at another one. Today's action. I didn't even look at this stuff. I've been just turning it on right now. All right, Amazon today. Let's see. It opened here. The opening price. It bottomed here. So we draw the line here now today. And okay, it tested that bottom again. And the opening price held. Because look, it never closed above. This time it went to the opening price. It went out, but false breakout. Turns out it was false. It came back in. It's back in to the range. Again, false breakout. All right, so today, Amazon has made a nice big range and it's bounced in between the range. That's all it's doing right now. It's sitting in the middle of the range. This thing just wants to sit in the range. It doesn't want to go anywhere. That's it. So, okay, if you want to play the range, you can play. You take a long here to the top, take a short here to the bottom. That's that reversal trading. But this is high risk.
Yes.
Okay. So what you're waiting for is a genuine false breakout, and then maybe you'll get an opportunity in the other direction. If it comes down here, maybe, before the afternoon at 1 p.m. or something, then it shoots back up, then maybe it'll break 173 and close at 174, maybe. Or so far today, it's just telling us it wants to do this. Okay, so let it do this. You're going to really try and trade this mess? No, you don't need to. See, here's the trick. If you're doing the 1 minute, if you cannot identify the range in the first 4 or 5 minutes, let it go. This one, how do you identify the range in 4 or 5 minutes? You really can't. That would be here. You only know that this is the bottom after it tested it twice, here and here. You only know this is the top after you found sellers here twice, big sellers, here buyers, twice. So you can be confident in both levels, but only after you've seen the buyers be aggressive here and the sellers be aggressive here. And they're both fighting for position. And look, it's just stuck in the middle.
Yes.
You don't want to be in this. Not like that other one, like, look at this, like AMD we just saw. This was so beautiful. Look, in 4 or 5 minutes, what a perfect range. And then perfect behavior too, because it broke out with volume, retest. The retest also happens with lower volume than the breakout, perfect. And then it moves. Regular ABCD pattern, then it moves. It's easy to look for this stuff. So if you want to, just stocks in play, Anything that's in play, anything with a big gap, with a big catalyst, with a big volume, put that on your screen 1 minute and just look for range. 5 minute range. In 3-4 minutes, you'll find the range. If you cannot, then drop it. So now you're getting a rule book that's really, really precise. This would be a precise 1 minute picture, as in on a 1 minute chart. I personally, I do it on the 30-minute chart, and then I wait on the 1 minute for the bounce on the level, something like that. Let's look at this one. What did Tesla do today? It opened here and it went just straight down. Now, in these first 5-8 minutes, are you able to find a range right here? All right, so leave it, dump it. And good thing you dump it, because look, it just went down, up, and it was a mess. Then down. Now it's going back at VWAP. Where does it want to go? I don't know. Can you tell me where this is going to go?
You can just see something down, maybe. But
Maybe
yeah, there is no price action.
yeah, maybe it's not good enough. So if you want to just not do any of the work and keep it really simple, just throw the 1 minute chart on the screen. And the first 3 or 4 minutes should give you a very clean range. Then you trade for that. If it doesn't, there's no trade, and maybe you didn't get any trade on the day. That's fine. Just leave it. Come back tomorrow. And you can just do this on the regular top 7 tech stocks. Look at this one. Meta, 3 minutes down here. Okay, and we found buyers. And then it's going right back to the top. At about 15 minutes, it's up here. But in those first 5 minutes, are you able to tell where's the top and a bottom? Did it test it twice? Did you find sellers and buyers in the same plane? Not really. It just kind of went down and came right back in where it came from, just to VWAP. That's all it did. That's the first 10. What can you tell from this?
Nothing.
Not much, yeah.
You don't know where it will go.
Yeah, you just don't know. Sure enough, it went up, and then it did an ABCD, and then it did a second leg up. Okay, fine. But could you have predicted that? Maybe, maybe not. It's hard. So there's that. Now, here's one thing I really want to show you that I really think is important in day trading. It's a bit of a cheat. Okay, so don't tell anybody you're cheating in the market. It's very important.
You have to.
I have to. Opening price. Okay, this green line here is auto marked on my chart every day on every stock. Opening price. It's always an important price. Today's opening price is very important for today's trading. Sometimes it'll go at the open, it'll go away from the opening price. And when it comes back, it could go away again. Or it could break through. And when it does, it doesn't look back. And look, when it broke through here, it's gone. It's not going to come back to opening price today. I can tell you that. It's already gone. You can sell options against this. I might do that later. And look, when it broke through, look what happened. As it got to the opening price area, these candles, the volume increase. Look at that. Massive increase. And then it starts breaking through, and see the volume just in this area. Just in this area. Something's about to happen. Opening price is always important. Something's going to happen. In this case, breakout, small retest, it's on its way. Now, you can trade that. So in this case, you don't really know where the bottom of the range is because it only did one bounce. You only found buyers once. What the market psychology is telling you that at the open, the sellers were very strong. And then 15 or 20, 25 minutes later, turns out buyers came in really strong and overpowered the sellers. And the real nice part about this is when it went down, remember, it was cheap. It's cheaper here at 476 than at 480. So when it's cheap, what do? People like to buy it. People bought it. So these guys who bought it, they're happy because it's just going up. They can sit and hold this thing. Then the next important area is here. Well, through VWAP, once you pass VWAP, the next important area is here. And even more buyers are coming in. All that green volume. Even more buyers are coming. So it picked up a lot of buyers, and even more buyers are coming. This is a very bullish opportunity. So if you're being aggressive, you can see this is the range. Here's the top, here's the bottom. Now it's hard because this only found buyers one time, right? And this particular red line is actually a daily level. Let me show it on the daily. This is the high of 2 days ago. So it is
Mm-hmm.
an important level. Look, it was previously, it was resistance. It came up here and it came down. So that was auto marked on my chart. And today, going to the 1 minute, where is it? To the 1 minute, look at that, a precise bounce off the high of 2 days ago. This is
Mm-hmm.
really exciting. I wish I was watching this. I would have taken this trade. It was weak. The sellers pushed it. The buyers came basically at an important level, high of 2 days ago. Then more buyers came here. By the time it's here, it's breaking out and retesting. You have about 1.5 minutes of opportunity to enter with a stop loss just below the opening
Mm-hmm.
price. And then you run this up to 485 as the big round number. That's your target.
So your confirmation is the volume before the breakout, right? So it
In the
gives you more confirmation.
Yes, in the area. Now here, this is not the breakout candle, but it's as
Yes.
it's getting there, massive volume. I'm
Mm.
already getting
And it's
excited when it happens. And look at the next one. As it breaks out, the volume is pretty good too. It's bigger than all of this stuff. You see that?
mm,
All of this area. It's bigger. There's more and more buyers coming in. And then this is the breakout. And then look at this candle retest. And the retest is with small volume.
the small, yes.
Perfect. Perfect entry. You can enter anywhere on this candle, even at the top of this candle and put the stop loss here. You run this thing to 185, you're getting 10 to 1 already. So the cheat is opening price as a very important level. And I love this trade. This is one of my favorites where it opens and it is weak. The sellers push it down to the point where it's cheap, to the point where buyers come at an important level, a recent level, which is basically 2 days ago high. Then right back to opening price, big volume, big breakout, retest on a nice, slow, mild volume, and you run this thing.
Mm-hmm.
And look what happened. First leg, ABCD, second leg, and that's it. It's not going to go much more than that. Same structure, same structure. Two legs, here and sorry, here
Yes.
and here.
Which are important levels for you? I have so many. Like I have the
I'll show
previous day close,
you. Yeah.
and
So
I have, yes.
these are the levels, and this is all I use.
Mm.
Yesterday's close, open, and high and low. Just yesterday's.
Okay.
Okay. And then you have 2 days ago high and low.
Mm. Yes.
Okay. And was this yesterday's? Yeah, yesterday's open. So today's open and yesterday's open. So let me make it simple. Today's open on today's level. That's one very important thing. Then for yesterday, you want all the levels. You want high, low, open, and close.
Okay. And for
Right?
the 2 days,
Just high and low.
only high and low.
Yeah.
Okay.
And here's again market psychology. I'll show you something. Well, think of it like this. Human beings, right? When we have an experience and it was very recent, it was just yesterday. We remember it. It's very clear. It's very traumatic. It's just right there. And then as we get time from it, 1 month later, it's not so fresh in our heads. It's not so fresh in our emotions.
Mm-hmm.
Fuzzy.
Yes.
It's, oh yeah, maybe that happened. It's a memory now. It's not, it doesn't feel real anymore. It's a memory. Same thing with levels. That's why yesterday's levels are very important. That's why yesterday, this is today, this is yesterday. Here's the
Mm-hmm.
low, the high, here's the close, here's the
And
open. Yes. So yesterday you have all the levels. And 2 days ago, it's a little more distant. So just the high and the low. That's all you need.
Mm-hmm.
And that's it. I'm not looking at anything behind that. And then today, what was the most impactful level? What was the opening price? This was today's trauma. This was today's experience. Think of it as a human psyche. It's the same thing. And really, truthfully, the market is nothing more than mass psychology of a lot of people trying to express their view on high and low and expensive and cheap and all that.
Mm-hmm.
That's all it is. So there you go. That's that. And look at this. This is basically where it opened today is approximately the top of a big range on Meta.
Yes.
And looks like it's breaking out. This looks like it's breaking out. So tomorrow, if this is a good breakout, with today ends with high volume and it ends up at around 490 or something, Tomorrow, I'll be ready to take a bounce off of 480, basically the top of the level. I want it to come down here. As soon as it bounces off, I'll be going. Something like I'm already planning tomorrow's trade. I'm not going to trade tomorrow, but if I was, that's the plan I'm going to look at on Meta. This is a very good range. Look what a perfect range, you know, and you can trade that. Let me see what that is on the 30. Look at this. Oh yeah, 30-minute chart. Look at this range. Here's the top. Here's the bottom. Perfect. It's a big range. It's been sitting here since all month, since the 1st of February. This is the whole thing. If it does a genuine breakout today, I'll be waiting for a retest tomorrow, approximately 480, 490. We'll have to identify the level. But it's kind of easy to see the range here, right? On 30-minute.
Yes. So you will be waiting to break for 86 where is now, right? With the volume.
Let's see. What would I look? Let's be precise. We got, I'll make this line nice and long. Yeah, this is the
and the other resistance.
yeah. This is resistance, basically. The bottom is here somewhere. All right, so this is the top. It was here, and this is about 482. Right
Yes.
here is about 488. So let's say about 485 really is the level. Okay, and look, that's where it is right now. Just about 485, just above. And yeah, this is an area of interest. Look at this. This is precise. See this? What's the high?
Yes.
High is 486. All right, so this level is pretty much correct. Now, if this breaks this level with seriously big volume, right? Then I want to trade long when it retests. That's what I'm looking for. And this could happen later today. It could happen overnight. It could happen tomorrow when the market opens. I don't know when. But draw your line and you come and look at it in the pre-market tomorrow and see what happens. Unless you want to trade later today, then look at it, you know. But I don't like trading in the middle of the day. I just trade the open and then leave it.
But this is, I think it's the best.
It's easy, you know, simple. And again, I'm doing it here on a 30. You don't have to. You can make it even easier. Just do it on a 1 minute.
Yes, I mean it's really valuable, but I have been trading from the higher time frames and planning trades. I think because I have enough time to look and think and all this stuff, so probably I will be using 30. I just have to practice a little structure and volume because I didn't look in these things so far.
Yeah.
And identify ranges because although I told you I'm good at the levels, but my levels are for reversals. They're different. I mean,
Yeah.
I look at extremes, and that's where levels I will draw.
Yeah. Well, I
So,
think
but I
this
don't.
breakout's better for you
Yes,
with your
you're right.
personality and your temperament and your patience, all of that. Breakouts will be better for you because it'll give you a higher win rate and it's available every day. Look, I've showed you just 3 or 4 tech stocks and we saw 3 opportunities for reversals. We saw the Nvidia, we saw AMD, and we saw Meta. All of them give you opportunities.
Yes, and the confirmation, this confidence, I understand that it's not going to happen every time, but logically it makes sense to me because with the reversals and the other breakouts, it's more of a gambling. Sometimes I really know that it's going to break, but sometimes I just don't know what we'll do before the break because I don't have a procedure exactly. So it will break and come down, and I will be losing every time.
There you go. Yeah. So you need your rules to be really, really clear. And here's the fun part. To be able to follow your rules, they need to be simple. If they are not simple, they're hard to follow because you're in this environment in the financial markets, which is a very stimulating environment. You're always like getting caught up in it's triggering emotionally. My God, I want to get in, I want to make money. Oh, no, I just lost some money. Let me get in bigger now. Like all of that stuff. It's emotionally, it's exhausting. And so when you're already dealing with that, then to try and follow complex rules, now you're overworking yourself. I don't know how to do that unless you're
You
a
are
super.
overwhelmed. I mean, you start because you have to think about so many things and price action, and then your rules when there are many around what you have to do and how you take the trade. It's really overwhelming.
There you go. So keep it simple, nice and easy. Really, really, really simple. And I mean, and just look at the chart here. There's the only moving average here is VWAP.
Mhm.
There's no other average or anything that'll bring more complication. You know, right here, I bet it probably bounced off the 20 EMA, probably. And then right here,
Probably.
probably claimed the 9 EMA, and then it probably went, most likely. But you know what? I don't have any moving average or anything. I'm not going to trade this in this area. You know what will happen? If you want to sit and trade this all day long, here's what you ought to do. Draw a line, okay? Basically, it went from here, it broke out of opening price, it ran up to here, okay? That's where it hit. So once it's breaking out from here, okay, take your entry here as a breakout. Look, slightly increased volume from previously. Okay, now you know. That's your entry. If you try and mess around here with the moving averages, you could get stopped out once, twice. I don't know. It's a
You
mess.
are.
Yeah.
Absolutely.
And then look at that. Then it comes right back, hits the VWAP double bottom. Then look at that. Right there, your line is still there. It claims the line again. Off you go again for a new high break of day. I mean, there's only 3 trades to take here. One is the breakout here, one is the breakout here, and one is basically a VWAP bounce for another break. You can even take the breakout here, basically high of day. That's it. So the less indicators you have, the less stimulation you have to take more trades. And all I did right now is draw one line. All these other lines, they're from higher time frames and all that stuff. If I was trading this on just purely the 1 minute without looking at the 30 or anything, it would just be opening price. This one would be here from 2 days ago. And I would have drawn this today. And I could sit here for like 4 hours and just trade this thing all day. I mean, I could make $20,000 just sitting here and trading this because it's actually simple. And you
Yes, it
know
is.
where and when to take it. There's no difficulty, you know? So same thing. It's not going to stimulate you when it's sitting here in the middle of should I get long, should I get short? Nothing, because you don't have a trade plan. Your only plan is on your line, right? And right here is the only time. And when you see a double bottom, that too with VWAP, and look at that excessive volume coming, this is such an obvious long. Could have taken this while we were talking actually half an hour ago. You know. Well, there you go. So here's what I'll suggest for you. Look at time frames. Keep this picture in your head and look at time frames and figure out what time frame you like. And it really got to be simple to you. It's got to be a time frame where when you look at it, it talks to you easily. You can just quickly when you see it, oh, there's the range. Okay, I saw the range. It should just come to you. If you have to fight and squint your eyes and zoom out and zoom in and figure out where is the range, that's the wrong time frame for you.
Yes. Okay.
For me, it's the 30-minute. For you, I would suggest 15 or 30. I don't really like the 60 and the daily. I mean, look at the 15 and 30. I pick one maybe.
Okay.
Try and look at that. And then start, you don't have to wait for the market to open, but start just using those time frames. Start just levels. Just look at dead charts. You can open your DOS here and just look at the last action of the last month on the 15 and 30. And just start drawing lines. And then watch what was the behavior. Okay, I see the breakout with volume. I see the retest. Okay, now here I see a false breakout, look followed by the real breakout. And then there was an ABCD, and then look, another range, and then it reversed from there. Okay. This exercise is good. You're not trading. You're looking at dead charts. But you're getting used to looking at them. You're getting used to applying the structure.
Yes.
Identifying the structure on the time frame. That should be all you should do for the next 7 days. Just do that when you and take screenshots of it. When you identify your line, you can write screen. Okay, and you can write on it, right? Okay, I found this resistance, this support, whatever, just small things. And really get good at that. Spend 1 hour a day just doing that. You can do any stock in the market. Anything that you remember a ticker, just type it up and see. Just look at all of February. Just look at the last 3-4 weeks. You know, that's all you need to do.
I'll do that.
Yeah.
I'll take screenshots and send to you, right?
Yeah, you can send them to me.
Just
If
to
you have
see what
questions
I'm doing.
perfect. Yeah, just send me some, no big deal. And we'll review them on the next session also. Because the first step is to identify where the price is with the structure. The second step is taking trades on this, whether breakout, false breakout, retest,
Yes.
ABCD. That's the second stage. The first stage
Yeah.
is really identifying it. And really, here's the fun part. When you start identifying it, when it comes time to trade on top of this, the second stage, it becomes easy. And when it becomes easy, what all our natural tendencies are is to go bigger. Our size gets bigger. Our conviction on the trade gets bigger. We're more confidence in the trade. Therefore, we put more size, put more risk, and the reward gets bigger. That's how you grow your trading. You do it when you have confidence in the style, in your trading style.
You have a lot of work with me, I will tell you, with the risk. And
It's
it's not that I'm not willing to lose or whatever. It's just my conviction in what I'm doing. I know that I can trade, but um, never made sense for me. It was always difficult and
Don't
never
worry.
been sure in what I'm doing, although I'm following everything.
Don't worry, you got it. That's what I'm here for. So it's all good. And remember, very important, think of it as sellers and buyers. Less of support resistance, number of touches. That's not really important.
Yes.
I'll tell you why. Very simple. Over here, sellers, right? Over here, what happened is the buyers overpowered the sellers. Okay? The sellers kept coming every time, pushing it down. This time, the buyers overpowered the sellers. Once that barrier is out of the way, the sellers are out of the way, this is an explosive rip up to the next place where the sellers can actually find some strength and do their work. Think of that, buyers and sellers. And you want to go with a team that's about to win or is winning. And here, you know, after the breakout, you know the buyers won because they've already broken out. And then they give you a chance to enter here. You know, it's really beautiful to think about human emotions and how we are. That's all it is. Buyers and sellers. Just think of it like that rather than support, resistance, number of touches. That's just technically you write that in a book. But when you're really in the market, this is how it is.
I will do this exercise to identify ranges.
Yeah.
And thinking from that point.
Yeah. Identify ranges,
Sellers
retest.
and buyers.
Yes. And remember the elements. We identify ranges, then identify the elements. The false breakout, look at the volume profile.
Volume.
The breakout, look at the volume. The retest, look at the volume. Then you have the run up. But the main thing is this. Let's get through this first. Range, false breakout, genuine breakout, retest. Once you get good at this and understanding how the volume works with this, all this stuff will be easy on this side. It'll come quickly.
Yeah, so it will become like a process.
Yeah, really
One
will.
process. With the volume, because I have to include the volume into the picture.
Exactly. Exactly. So you got it. Really, I've told you everything that I learned in 5 years right here. That's it.
Really?
Yeah.
And so what I did for 4 years, I mean, I learned price action, but I didn't.
No, it's not that simple. Even I went through about 20 different trading styles and I lost a lot of money. This was an expensive lesson.
I didn't. I lost before.
Okay, well, there you go.
I
You know.
gave money someone to trade with my money and he lost everything.
Oh gosh, no, don't do that.
It was not only me. There were so many people there.
Okay. It's different. That's a hedge fund. That's different.
No, there's
Yeah.
the usual scams
Yeah.
in Dubai.
Oh yes, I'll deal with
And
that.
yeah, there are so many here. And
Yes.
yes, so I didn't lost much.
Okay. Good. Good. So this really should be your focus right now. There's nothing else that I should tell you now, because if I tell you more, it'll make it more
Yeah, it
complicated.
will be too much.
Yeah, so let's just focus on this. And again, let me tell you, this is the foundation. Once you got the foundation, you can build a structure on top. The execution side, and I'll show you risk management, all that stuff. We'll get into that. But this structure foundation is so important, because then you can go so many places with this. You can even do options and stuff, and you know it really gets good.
I tried options also,
Yeah,
but in simulator. in simulator.
So take it easy. There's a time for that, and we'll do that. But this is first. Cool. You have any
I'll do
questions?
that. So I'll do that, and then maybe I will have questions on the next session. So I
Yeah.
pick up one time frame.
Yeah.
Nothing in
Mhm.
daily and looking into weekly and all this stuff. So one time frame identifying ranges,
Mhm.
and we'll be looking into the and false breakouts and breakout of the range and looking into the volume, taking a picture, right?
There it is. That's it.
From one time frame
Yeah.
or with 1 minute.
Just on one time frame. Just
Okay.
figure out which one you want to play with. 15 or 30, I'd
I
recommend
will
try.
figure out. I'll figure out maybe either 15 or 30. I'll see how it looks
There you
for
go.
me, how I see it.
Cool. Perfect. Perfect. Just do that. Shoot me screenshots anytime. I'm happy to respond anytime. Otherwise, I will, I'll talk to you next week. And I'm always
Yeah.
available. Like, call me
So
or message.
we set Thursday, right?
Yeah, this calendar is the same time every week. We have 8:30 on Thursdays. And if we need to
Okay.
adjust, like today, we happen to come on earlier. That's great. We can
So
adjust.
if you are 7:30, I'm okay with that. And with 8:30 also, I'm okay.
Okay, we'll see. For now, it's okay. It's just there. It's in the calendar. It's in the schedule, and we'll see. No
So
big deal.
next Thursday is 7:30 or 8:30?
Now let's keep it at 8:30.
Okay.
Today, I happen to become free early, so
Because okay.
so I just asked you if
So
you.
I will send you some screenshots because I'll do some work in the weekend,
Great.
and we'll see. Maybe tomorrow also I can do something.
Okay, no, that's perfect. That's perfect. Take your time, do it, but practice it.
I
1
will.
hour a
I
day is
will.
enough. And
I will practice.
good.
And do you want my trades or no?
For now, just focus in on the
On
structure
that.
thing.
Okay.
The simple one thing to do, get good at it. Let's just keep it clear, keep it easy.
And only VWAP, nothing else, and I'll put the levels or just without any levels.
Yeah, on the bigger time frame, not even VWAP, just levels. This is just my 1 minute chart. It has VWAP. That's it. It's only the 1 minute chart. Nothing else.
Okay, I'll do that.
Yeah, keep it easy. Good, great. So yeah, great first session. Great talking with you.
Thank you,
I'll
Avi.
talk.
It was awesome. Honestly, it was awesome. Like
That's a pleasure.
my eyes are opening, so let's see my eyes to see the ranges now.
You'll get it. You got it. It's all new. You got it. Great. It was great talking to you.
Okay,
And yeah, I'll talk to you soon then. Yeah.
me too. Thank you
Okay.
so much.
Sure. Take
Thank
care.
you. Bye bye.
Bye bye.
Bye.